Hey, everybody. Good morning. It's the start of a new week. I'm glad you've joined us here for Trader Talk in today's market. I'm Brent Moores. I'm sitting in for Kevin Horner today, and I'm joined by Mr. Scott Durfey today. Scott, good morning.
Good morning, Brent, and good morning, everybody. It's good to be with you. I see that we've got some people that were just with us in Orlando, so that's kind of exciting to have you back. Do you guys never give up? It seems like you're doing this every day, and so it's great that we're doing it again today. Welcome, everybody. Thanks, Brent.
Hey, yeah, no, Scott, I'm glad you've joined us. And for those of you who aren't aware of Scott, Scott does our events, travels all over the country to our workshops. And just a quick plug, if there's a workshop in your area, hey, check it out. I can't guarantee anything other than what I will tell you is this. When I talk to people who have gone to a workshop, and I'd encourage you, those of you who have gone to a workshop in the chat, to type in and tell you what your experience has been at that workshop, because they are very, very highly well reviewed there on that. So we'll leave it at that. But let me just mention this. You can follow us on X, and also Rachel Deschelle is in the chat, help us out in the chat today. She's a coach here, and I encourage you to follow her as well, at Brent Moore CS, at Scott Durfey CS, at Rachel CS. And there you go. Hey, let's go through a few. Let's go through a few things here before we get to the main stuff. The information today is for general informational purposes only. It's not an individual recommendation or individual personalized investment advice. And options do carry a high level of risk. You're not suitable for all investors. I don't think we'll be hitting options today, but we'll just mention that just in case. The paper money software application is provided for educational purposes only. And Schwab does not recommend the use of technical analysis as a sole means of investment research. Past performance is no guarantee of future results. And all investing involves risk, including loss of principal. And there we go. What are Scott and I going to do today? We're going to go through the general trend of the major market indices, talk about trends of various sectors, individual stocks in the news, individual movers, and look at various charts there. So with that being said, Scott, let's head on over to the S&P 500. We had a big down day on Friday. I have a 20 and 50-day moving average on the charts here. Any thoughts on the S&P 500 here, Scott? Just
yeah, initially. So this is one thing, Brent, that one thing that we really talk a lot about when we're really focusing on technical analysis. But you can see how the S&P 500 has used that. So we got a 20-day moving average in the red. How it's used that 20-day moving average as a level of support. And as we know, when we're talking about levels of support, we expect that when a stock comes down and hits a level of support, we expect it to bounce, unless it doesn't, and it didn't. But notice what it did. It came right down and hit that 50-day moving average and potentially bounced off that. Now you see where we're at today. We have a little open above the 50-day, kind of between the 50 and the 20-day moving average there. So it'll be interesting to see how the market responds today. We'll see if the technical analysis holds. We would expect that potentially to move a little bit higher today, Brent. We'll see how that goes.
Yeah, so far so good. This is, again, we're a few minutes into the market, but if the market were to end with the candle something sort of like this, we call that a Harami candle, a bullish Harami candle. And that's a positive sign, not a guarantee, but it is a positive sign. And, just as you go back in history, when we look back, and let me go back a little bit farther here in time, there's been times in the past where we break, but like here, and we did recover. So, the trend is the trend. At some point, the trend will end, but for the trend trader, and there's a lot of different approaches to the market, for the trend trader, until the trend gets proven otherwise, most trend traders would probably say, hey, the trend is still going. Despite breaking the 20-day, we'll see what happens. Now, that big move down seemed to be spurred on by the president's comment on Friday regarding China and possible escalation of a trade war there. And then this weekend on Truth Social, he backed off it just a little bit. He said, don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want a depression for his country. Neither do I. The U.S. wants to help China, not hurt it. And so people took that as a positive comment. And the market's up about 1% today. So that's not nothing to sneeze at on that.
You know what, Brent, one other thing that I might comment on, you'll notice, and we've been experiencing this phenomenon since essentially April, where we see the market just continually moving up in bullish fashion, big time. But when we see that, people start getting nervous. Okay, how much higher can it go? How much higher can it go? How much higher can it go? And so it's normal. In fact, it's healthy for a trend to kind of pull back. We have to exhale and inhale, right? We can't just inhale. Eventually, we have to exhale, and that's what we see the market doing. You'll notice that a lot of bull flags in this trend, and potentially we're seeing that again. Now, we'll see how that continues, or if it continues. But that's nothing for us to freak out about when we see it pull back a little bit like that.
Yeah, no doubt. And we probably see a fairly similar thing here on the NASDAQ chart. Trend going up, broke the 20, not quite to the 50-day, but a little bounce today, up about 1.33% or so today. And to your point, if we don't get pullbacks along the way, then people get more concerned about bubbles, because eventually we'll get a pullback, and it'll likely be a bigger pullback if you don't get smaller pullbacks along the way. Now, it doesn't mean we can't get a more sustained pullback here as well. But NASDAQ, these are a lot of your higher beta stocks. When it goes up, tends to outperform the S&P 500. When it goes down, it tends to go down more than the S&P 500. But for the most part, this chart looks pretty similar, I'd say, Scott, to the S&P 500 chart there.
Yeah, almost a mirror image of it. Really, and that's not unusual. It doesn't happen all the time, but that's not unusual either.
Right, exactly. Now, one chart that often does look a little bit more, I'd say, dissimilar to those charts are small caps. Although in this case, we got a similar move here. Bigger candle down, bounce today, up almost 2% today. Small caps, what are your thoughts on small caps, Scott?
Well, what small caps are oftentimes where opportunity lies in wait, right? And because these are the ones that are waiting to move into, more of the general public's eye, to be more desirable, etc. So, a lot of people love to focus on small caps. We'll see them move sometimes in conjunction with, like we are today, with the large cap indexes, and sometimes they'll be slightly different. But a lot of opportunity often, and again, not a recommendation and no guarantee, but often we'll see opportunity lying in wait in the Russell and all of the other small cap indexes as well, Brent.
Yeah, and just I have a year chart here. Sometimes I'm asked, and I just changed it to a 6-month chart, what time frame to use. In my mind, it's kind of a balancing act between, you want some perspective so you can see support and resistance level, you can see the general trend, but you also want to have enough detail at the same time to see what individual candles are doing. So usually, and this is just personal preference, I end up with a 6-month, 9-month chart, maybe a year chart for this kind of more intermediate to term trend. But then you can change time frames as well on that. So, if you want to look intraday, you can look intraday, and we can see small caps. What have we done? Well, out of the gate, we had a nice run up out of the gate there. These are 1-minute charts. That's selling off a little bit. You can then, if you want, add something like a pivot point on there, and you can look for levels. Let me just zoom in here a little bit. Maybe you can see it a little better. Gap up above the pivot point, and now these can act as support or resistances.
Right.
intraday there on those. Scott, any comments on the intraday
Yeah,
chart
and
or time frames?
I love that you bring in the pivot point, because this is exactly what I was seeing when you put that up. Even before you put those pivot points, I saw that that opening candle this morning as the bottom of that kind of could actually act as a level of support. We'll see if that happens, and if that does happen, what we'll be seeing here intraday is a setup of a potential a bull flag intraday.
Yep. So here's the opening candle. So without the pivot points, you can still see that. Even look at this as a 20-minute moving average, because I've switched the time frame on the chart to with 1 minute data. So each of these candles are 1 minute, and the indicators adjust accordingly on that.
Yeah.
So there's your there you go. And not everybody is going to use the intraday chart, but you can use it if you want. And I didn't really do it on the other charts, but we can quickly go back. Here's the SPX. Let me zoom in. Pivot point.
Yeah.
Here's the open. Again, they don't have to be the same. Here, they're basically the same price, but the same price is there for the basically open price and the pivot point. Bounce right off that guy, and so holding up pretty well. And on the NASDAQ, there we go. Open up a little bit higher. Actually, a little bit lower than the open price, but we have held that pivot point on that NASDAQ there on that. Yeah. So I'm going to, but in general, I'm going out to a slightly longer term chart. And, there's some other things I want to look at other than these major indices here, Scott. One thing is something that's big discussion in the market is interest rates. So let's just take a quick look here at what the 10-year is looking like. This is the 10-year yield. And for those of you who are not familiar with it, you just take this and divide it by 10, and that'll give you the interest rate. So this would be like 4.1%. Here we're below 4.1%. The general trend has been lower on this, and this has certain effects on the economy. A lot of you, those of you who have more, are looking for a mortgage maybe, or to refinance, this isn't the mortgage rate exactly, but there's a correlation between the 10-year, and it certainly affects other parts of the economy as well. Any thoughts on interest rates there, Scott? Yeah.
Including the stock market. Right. Yep. Because oftentimes we will see a relationship, sometimes inverse and sometimes they run parallel. And when each of those two things happen, it can mean different things. But when we see interest rate yields, or the 10-year yield, for example, pulling back, oftentimes that means that investors and traders are more interested in entering the stock market than they are the bond market at that point. And so, we can oftentimes use that as maybe a proxy of where we potentially would see or look to see the market moving at any given time.
Yep, absolutely. And just a reminder for everybody, bond markets are closed today for the Columbus Day holiday. So if you're not seeing movement there, that's why. But I don't overemphasize any one day's action. I mean, this is probably true for most graphs we look at here. Look at the overall trend. Interest rates have been lowered, and one effect of that is it makes corporations, it gives them cheaper debt financing, which helps companies. And so that's a good thing. When interest rates drop, generally it's positive for stocks.
Right.
You're valuing stocks and you're using discount cash flow models. Lower interest rates tend to help market valuations of stocks. Now, if we were to all of a sudden hit a strong recession, you'd probably see interest rates drop significantly, and that probably wouldn't be such a good thing. Ideally, what we'd see is kind of a nice, slow lowering of interest rates. I think most market makers would say that would be a positive development there, Scott.
Absolutely. Yep.
Okay. All right. Now, just keep in mind, there's a difference between this 10-year yield and the Fed funds rate. And the Fed funds rate, let's just take a look. This is a third-party website. This is the CME Group Fed Watch tool. Let me just bring this up. And it basically is looking at Fed funds futures. And let me get rid of that. And you can see for our next meeting, which is at the end of the month, what the market is pricing in for the Fed funds rate. And when we look at that, the current rate, you can always see right here on the screen. And so expectation of a 25 basis point cut, a high expectation, I should add, of that 25 basis point cut. And so part of this is data dependent. One of the things that may be hampering the Fed right now, though, in terms of the market, in terms of deciding on monetary policy, is this government shutdown is going to limit economic data that we would otherwise see. But right now, it seems the market is pricing in about a 25 basis point cut coming at the end of the month here, Scott.
Yeah, 96, almost 97% chance there showing there. Yeah.
Yep. So that is anyway. So there's that. Let me get rid of that, and let's look at some other things in the market. Let's look at the VIX. Oops, that is not. Let me just see if I can type in properly here. So there's the VIX. Little jump on Friday, Scott. Does that surprise you on the VIX?
Yeah, not one bit. So Friday we were in Orlando teaching that class, and as this was happening, which was really interesting. This is a direct response. You mentioned it earlier, but this is in large part a direct response to the comments or the information that we were getting from the White House around tariffs, et cetera, in China, right? And so we see the VIX climb. Obviously we're still up a little bit. 20 on the VIX is not a super low VIX number, so that's interesting. We often call this the fear indicator. So maybe we're still being a little cautious today, and we're going to see how this all plays out.
Yeah, it is off today, back down to about the 20 level. We'll see how it goes. And I would assume if the market kind of continues its general trend up and kind of, dusts itself off from Friday's action, we'd see that VIX kind of gradually move it way back down to where it was before. But it takes time. And the VIX is, for options traders, and we're not going to talk about options trading today, but some options traders can sometimes like to see the higher VIX depending on what option strategies they're doing. Just an invitation to everybody. We do have quite a few options webcasts if you're interested in learning about options, including getting started with options webcasts. I teach a webcast called Condors, Calendars, and Butterflies on Fridays. I invite you to. But yeah, in the chat, Kelly says it affects the premium levels. Yeah, the more options are more expensive in this case. It can be good or bad depending on what kind of option trade you're doing.
Depending on if you're buying or selling that option. Yeah,
exactly. Okay, so there's the VIX, and when there's more uncertainty and fear in the market, the VIX tends to go up. Other items that maybe I'd look at, and then I want to kind of turn to earnings season after this, Scott, and talk about that for a minute. But this is a chart of gold. Now, just a reminder to everybody, we're not trading gold today. We're just talking about the commodity price, and that's going to be true for other commodities, futures commodities that we're doing here. If you are interested in futures, there is a futures webcast we have on Tuesday mornings. But gold, man, Scott, I don't know what to even say about this chart.
Yeah. Well, it's really interesting, because from a technical analysis standpoint, we are now in the process of breaking a new level of resistance, right? We have come off what a lot of traders and investors could see as a bull flag, but we have just been doing this on and on and on. And you've heard the narrative. How much longer can gold continue to do this? And I think that's a trap that a lot of traders get into. Now, I'm not suggesting that gold's just going to continue to rip to the upside, but it could, and it will continue to until it doesn't. And
Yes.
it's just pretty much how it works, right?
Yeah, and regardless of what you believe or I believe on the market, the
Yeah.
market's going to do its thing. And you may, this is to everybody out there. You may have this notion that the market is overvalued. A lot of people have that notion. A lot of experts have that notion that the market is overvalued and should come down. But I'll tell you, in the past, a lot of people have had that. Back back a year ago, people had that, or back a few months ago, people had that idea. Yet it keeps on going up. So don't get too married to whatever idea you have on the market in terms of whether it can go down or not. And you have your own approach. And I'm not telling anybody to buy or sell right now, but I'm just saying you got to be careful. And so bringing it back to gold here, yeah, gold seems like really high, and it is. I mean, compared to what it was, but I don't know when this is going to end. Right now, it's just ripping higher. People are buying gold as it is an asset class. It's one that's outperformed. It's come into a lot of people's mindset. I mean, for a lot of years, people just said, well, gold is kind of historically underperformed the market, the stock market. And, maybe it'll be a small little part of a portfolio for diversification. Well, I think some people are getting a different view of it, including some foreign countries who are using gold and maybe buying gold instead of dollars, and even some other central banks, perhaps. So regardless, gold has been ripping higher, no doubt. And in the chat, MH08 said gold was $2,500 a year ago. So that just kind of shows how much it has gone up.
What's another thing, Brent, if I may just mention this, another thing that's really interesting is gold has kind of historically been a flight to safety.
Yeah.
People, when they get nervous about what's happening with the stock market, traders and investors will take a flight to safety. And oftentimes they'll use gold, among other things, but they'll use gold as that flight to safety. But here we have the stock market going crazy and we have gold going crazy at the same time. So this is really an interesting phenomenon that we're experiencing right now.
It is. It's kind of strange in that regard. It's not unprecedented, but often when you see gold doing well, you're thinking, well, that's because the stock market isn't doing well. Well, they're actually both doing pretty well right now for the most part. They're on that. Now, while we're on it, there's another metal that is not doing too bad itself, and that is silver there, Scott. Thoughts on the silver chart?
Yeah, it kind of looks a lot like the gold, a little more smooth in some of its ups and downs. I think there was some news that came out around some shortage around silver recently. So that in itself will draw investors to buy, etc. And I think that we're potentially seeing that. What I find interesting on this one, Brent, is we have bounced so that the candle right there you go. The candle right before today's candle was kind of an indecision candle. We have a long shadow to the up. We have a long shadow to the downside. We have a small body, a small body of the open and the close. And then all of a sudden we bounce right off of that today. So that is a very strong bullish move off of a bull flag, off of an indecision candle. And so this may be an actionable, not a recommendation, but this may be actionable for a lot of investors and traders as they continue to see this.
So let's continue down that path just a little bit here, Scott, because let's look at a couple charts that maybe are exhibiting something similar. The point is, when you're in the middle of an uptrend, what some traders look for is they'll look for kind of a pullback, a bounce, if you will, and then a bounce. And sometimes we'll look at something like a close above the high of the low day. Now, that may be a term that some of you know. Sometimes you'll hear it referred to as a hold, close above the high of the low day. Basically, what we do is, in the context of an upward trend, you look for a pullback where you see a new low. That would be yesterday. We had that, or Friday, I guess. We had that low. And then you look for the high of that day, and then you look for a move above the high of that low day, a close above the high of the low day, or perhaps a touch above the high of the low day, a move above it, as a possible approach to entering the trade. Again, it's not a recommendation, but we can see something sort of similar on. Let's look at a couple charts here. Here's MP. We had that back here, Scott, and low day.
Yep.
Next day,
Low day.
not so much, and then bouncing up.
Exactly. And look at the candlesticks right around there too. You know, we have that a inverted hammer right there at the level of support 2 days ago on Thursday. Even Friday's candle has a very similar look to a inverted hammer.
Tested higher.
Exactly. Yeah. Both bullish candles. We do have a close. Interestingly enough, you know, the close above the high of the low day happens here as well, by 2 cents. But it's still a close above the high of the low day. Even if it's a couple of pennies, that means the bulls are winning this tug of war. And in that fashion, you know, we see what happens today. Now, a word of caution. You know, we're seeing these candles for today, and they look big and bold, etc. If it were to pull back, that top of that and close lower than it is, where we're seeing that high right now at 93.59, that will just be part of a wick. So, you know, until that candle is complete, we can't really complete our analysis around that. So keep that in mind as well.
Yeah, we're only a half hour into the day. Let's look at one more kind of on the same lines here, although maybe not quite the move here. It's up 16% here. Another big mover. So these are big movers today, MP and OCLO. We had kind of a big flag pattern here on this. Bounce up, gap, move higher today. Thoughts on the OCLO chart there, Scott?
Yeah, you know what? Could you draw that the flag pattern? Could you just draw the pull on that flag pattern that you mentioned first? Starting there around 9:15 or even 9:08, right in there. So if you'll just draw that, and then, you know, so again, what we could typically, from a technical analysis standpoint, we could take that pull and then duplicate that, move it over, and then that would be what we would expect our target to be as it continues to move to the upside. And I think that we still have room to move if we were to do it that way, Brent.
Yeah. You could make a case starting at down at this low. It did give us mini flag kind of there. You could start it here. Either way, if you want to duplicate that, just the trick on the Thinkorswim charts is if you take just a diagonal drawing tool, you can go up to drawings and do that. You can go down here, go to this diagonal drawing tool. And if I do the bigger one, draw the line, then you just right click on it, duplicate that, and then you can just move that over if you like. And if you go from the other one, go ahead, Scott.
There you go. And another thing you could do, Brent, is draw the other one too. You know, you said that, you know, for example, we have the shorter right there when we have those two pauses, those 2 pause days. You could also draw that and put that in there. And now you have 2 potential targets. You don't have to use one or the other. You don't have to use any of these, but you don't have to use one over the other. And one is not necessarily preferred over the other. So you could put both of those on there and kind of monitor how it goes. If it blows past that next one, you could move a stop up. You know, you could put in an alert. You could put a whole bunch of different things to kind of help to monitor that, to make sure that we're picking up the move to the upside.
Yep. Good point. So obviously a lot of different ways to consider trading it. We've had a big move. Just because a stock has moved up doesn't mean any possibility of trading it is gone. I mean, some people will look at the chart and will say, well, we missed the move. Well, I don't know. This could be the very high for all I know. But if you do get in, one approach that some people will do, even though it doesn't guarantee anything, is you could put a tighter stop on this. In other words, if you're getting in where the stock is now, you may not put your stop down here. You may go, well, hey, look, we had kind of a resistance level down here, which old resistance becomes new support. I'm going to put my stop there or something like it. Or even if you're tighter, look, halfway out on the candle or something like that. Those are all approaches here that traders can use. You got to use your own. Just remember, if we put a stop in at 160, it doesn't guarantee we're going to get out at 160. The stock could gap down to 120 overnight for all we know. And then you'd be getting out probably closer to that level there.
One other thing, Brent, on this particular stock, if we understand what the company does, Oklo develops advanced fission power plants to provide clean, reliable, and affordable energy at scale to the customers in the U.S. It also commercializes nuclear fuel, recycling technology that converts nuclear waste into usable fuel for its reactors, etc. I just got that from the Analyze tab. If you go to the Analyze tab,
let me show you where you can find that.
Yeah, it'll tell you that. Now, knowing what we know around AI, knowing what we know about clean energy, knowing what we know around those types of things, understanding the company, I mean, technical analysis is awesome and I love it. And it's kind of my go-to. But if you understand the company a little better and what they really do, here's where that can add advantage to our decision making.
Absolutely. And if you are interested in fundamental analysis, this is kind of a pretty good summary page here to see things. Now, keep in mind, this is kind of, advanced fission power plants. This is kind of more forward-looking, you'd probably guess, in terms of sales there. It is in the utilities sector, which has been really doing strongly lately, which we'll look at in just a little bit. Well, the thought is this AI AI economy that we're looking at is going to demand a lot of energy, and utility companies could benefit here. So what we're doing is, you're probably not a surprise maybe that their earnings aren't great right now. That's very common. It's more of if you're going longer term fundamental, it's probably more of a investment based on future potential rather than where the current earnings are right there. And you can scroll down and see more information on that right now. So that's good. I'm glad you called that out there, Scott, on there. Now, here's what I want to do. I want to look at, we got some news this week. We're going to have some news this week coming up. In other words, we have earnings coming up this week. So I'm going to flip over from the Analyze tab to the Market Watch tab. I'm going to go to the calendar section. And I have earnings checked. I have other stuff unchecked. And just to limit it, because there's a lot of companies out there, what I'm going to do is I'm going to just change this over to, well, let's just do S&P 100 to really narrow it down quite a bit here. Now I'm just going to be showing S&P 100 stocks. Today's what, the 13th?
13th
so
today.
Here's tomorrow. Look, we've got BlackRock, we've got Citigroup, we've got Goldman Sachs, we've got Johnson & Johnson, JP Morgan, Wells Fargo tomorrow. Do you guys see a similarity between those? All of those are financial companies. This is kind of the traditional start of earnings season coming out tomorrow morning. So it is upon us, and that certainly can affect the stock market, can it, Scott?
Absolutely. And, I know it's not an options class, but option traders often love earnings for that reason. Around earnings, we'll see volatility change. That's one thing that we can kind of count on around earnings is the volatility changing, et cetera. So absolutely. And I'm glad you bring this up because, once a quarter, we run into this earnings season and it can really have an effect on the market, either good or bad. The last little while, we've seen earnings just coming in great for the most part, with a large number of a high percentage number of beats over non-beats on their earnings, etc. So earnings are really important. Can be.
Yep, they sure can. So we're kicking off earnings season tomorrow, and then if you go forward, actually, let me get out of this and look forward. Then you're going to start to see later in the month. You're going to see some bigger names coming out, such as Alphabet, Google, Meta, Microsoft. So those, do tend to move the market more, but you never know. So there's kind of two things. There's the individual movement of of a particular stock moving. Also, just the total sum, I guess, of was this a good earnings season or bad earnings season? Because if you are getting better earnings out of the market, it can help sustain higher valuations in the market there. If earnings starts to collapse, then people are going to put into question the valuations of the overall market, and that could certainly have a very negative effect.
And Brent, if I may just interject here too,
Yep.
and that is especially true for some of the individual indexes. For example, you look at the S&P, and the S&P is largely controlled by the Mag 7. And you see these Mag 7, we see the Mag 7 earnings coming out beginning at, there you go. And look, for example, look how big NVIDIA is. This is a representation of the S&P 500. You can see based on what you're seeing here is what we call the Market Watch Visualize tab. And when you see that, for example, look at the size of that block on NVIDIA. That is the size of NVIDIA compared to the other companies in the S&P 500. So when we see NVIDIA or Broadcom rather, AMD or any of those others, Oracle, Google, Meta, you see JP Morgan's pretty good size, Amazon's pretty good size, Tesla's pretty good size, even Eli Lilly's pretty good size in this. And so if we were to see a trend happen, for example, among the Mag 7 and either coming down or going up, that can move and indeed will move that entire index, to your point, Brent.
No doubt. And keep in mind, a lot of these companies, these have higher valuations that need higher earnings to justify the higher valuations. So if earnings start to be very poor, the companies that are going to tend to get hit the hardest are companies like these. Now, that's not, I can't guarantee any individual company here, but just in general, these are the type of companies that tend to have higher valuations rather than something like these consumer staple companies or these healthcare companies, or even a lot of these industrials.
Yeah.
These are smaller companies. And so their valuations aren't as high. So these have a bigger impact on the market as a whole because they're a bigger part of the index. And they're going to be more sensitive to earnings typically. And therefore, if earnings is good, that can help propel the market forward. And if earnings is bad, it could certainly be just as negative for the market there. So I'm glad you brought that up there, Scott. Good point on that. Okay, we only have a few minutes to go. Let's look at some stocks in the news here. And what I want to do is let's start with JP Morgan. This is one that earnings is about. Earnings is tomorrow on JP Morgan. But they had some news I want to mention on this. And it's this. JP Morgan launches a 1.5 trillion, that's with a T, folks, a $1.5 trillion security initiative to boost critical industries. JP Morgan Chase announced on the Security and Resiliency Initiative a $1.5 trillion 10-year plan to facilitate, finance, and invest in industries critical to national economic security and resiliency. JP Morgan will make direct equity and venture capital investments of up to $10 billion to help select companies primarily in the United States, enhance their growth, spur innovation, and accelerate strategic manufacturing. So it's reacting fairly well, up to almost 2.5% on that. So obviously that's a long-term investment there. And we'll see how that plays out. But nice little bounce on the chart there, Scott.
Yeah, definitely a nice little bounce, and we're seeing what could potentially be. Now we're not there yet, but if it continues to go up a little bit today, we could again. Somebody said in the chat too. My favorite word is hold. We could actually see that happen today too.
Yep, Absolutely. Okay, let's look at another stock in the news here. Here is Boeing. Okay, up a little under 2%, so not a huge thing. But the news is President Trump told reporters that the U.S. could impose export controls on Boeing plane parts in response to China's export limits on rare earth minerals. So the president said, we have many things, including a big thing is an airplane. They have a lot of Boeing planes. They need parts. Okay, so that doesn't seem to be negatively affecting Boeing here, Scott. I mean, we're almost up almost 2%. A little bit of a bounce, but certainly not a hold here by any means.
Definitely a little bit of a bounce. That little bit of a bounce is happening in the area of support. And remember, when we talk about support and resistance, they are areas, not exact points. And so we're seeing that in that area. We do have, however, we're still below the both the 20 and the 50-day moving average. So that's also something to be aware of and maybe take caution around it.
Yep. And let me just finish up with one thing here, Scott, because we're just about out of time.
Yeah.
But I just wanted to bring up the sectors because I kind of alluded to this earlier. This is the sector performance. This is today's sector performance. And you can see, do I have all 11 there? No. Wait, whoa. I have the wrong group here. Let me go to sector indices. Okay. So so they're not all up today. Staples is down today, actually.
Yeah.
Well, and healthcare is kind of break even almost on this, but mostly a positive performance. And just keep in mind, Staples and healthcare are smaller sectors than some of the large sectors. But this is the month performance of sectors. Let's finish up with this here, Scott. This over the past month. Utilities up about 6.5%. Okay, remember we were looking at Oklo earlier. We talked about that. We talked about possible energy demands with AI. Utilities has been benefiting lately. Here's the chart for utilities. That's quite a run. A little bit of a flag here right now. Where's it going from here? I don't know, but you can see just visually why utilities has jumped up. Now, let me add one more thing to this, and it's something that Paul brought up in the chat, which is a great thing, a great issue, and we can't get into it too much today, but he said lower beta as well. So it means there's a lower correlation between the utility sector and the rest of the market, and that can be a beneficial part of a portfolio. I'm not recommending utilities in a portfolio here. What I'm saying is having some lower beta stocks in the portfolio is used by some traders to try and help diversify their portfolio. Other sectors performing well over the last month, IT, that's what this one is, up almost 5%. Healthcare, up about 3%. Most of the others, not doing so hot. Any final thoughts for us today here, Scott?
No, gang, we're in an interesting time in the market, understanding and learning and staying up on the types of things that we've been talking about today can indeed, in some cases, many cases, give some benefit to our decision making. I think the biggest thing here is helping us have confidence in our approach, Brent. So thanks for being with us, everybody. Thanks for letting me be with you, Brent. I appreciate it very much today.
Hey, it's always good to see you, Scott. Good to hear your thoughts. And make sure next time there's a workshop in your area, go to it. I can't absolutely guarantee, but I have a high confidence Scott Durfey will be there at that workshop that you're going to go to, and make sure you say hi. And everybody, thanks for joining us today. Make sure you subscribe to that Trader Talks channel on YouTube so you don't miss future content. I want to thank Rachel Deschelle in the chat today, helping us out. Always appreciate Rachel. And make sure you check out Rachel tomorrow in long options. She's teaching long options, and that's a class she's teaching. Everybody have a wonderful day ahead. and we'll see you all down the road here. Bye-bye, everybody.